Welcome to the back roads of Illinois. On today, we're going to talk about the commodities markets on today's podcast on a Thursday. We have Greg Johnson from TGM Markets and Jamie Gieseke from Paradigm Futures in Sioux Falls, South Dakota, and John Heinberg from Total Farm Marketing. We were back with Greg Johnson from TGM Markets. We were joining with Greg Johnson from TGM Markets, part of FS Grown Mark and Champagne. Welcome to the show. How are you today?
I'm doing well, Caesar. Thanks for having me on.
What's in your mind about the markets for right now?
Well, after a very disappointing first 8 months of the market, we finally seem to have found a bottom here, and we've bounced the last couple of days. So we're excited about the prices bouncing a little bit, and we're very excited about the yields that we're going to have here in central Illinois, as well as in the whole state of Illinois. We're looking at potentially very good yields this year, record yields, in fact.
How is the corn yields as far?
We haven't got into harvest here in central Illinois yet. There's been a little bit of corn taken off in southern Illinois, but there's been a lot of crop tours going on, USDA, Pro Farmer, that type of thing. And it appears that Illinois will set a record. The previous record for Illinois was 214 bushels an acre, set in 2022. Here in Champaign County, the record yield is 222 bushels. That was set in 2021. It appears that we will easily break those records. Illinois is expected to be 225 this year, and Champaign County is expected to be 235 bushels this year. So we are looking at record crops by 5 to 10 bushels more than what we've had in the past.
How is the markets for this afternoon? We're near the close.
Corn prices are down a little bit, 3 to 4 cents. Beans are down 7 to 8 cents. We've had a nice 4-day run of higher prices, but that string looks to be coming to an end today as we're seeing a little bit of profit taking. Farmers are taking advantage of this mini rally and selling a little bit of both corn and soybeans.
Do you have some concerns about recession?
I guess we have concerns about the lower prices. Corn prices are down $2 a bushel from where they were a year ago. Soybean prices are down $3 a bushel from where they were a year ago. So the farmers are receiving less for their commodities, and the increased yield will help offset that to some extent, but not entirely. Corn and bean prices are down about 22 to 23% from a year ago, while the yields are only up 5 to 10%. So there's going to be a little bit of a pinch there as farmers receive less for their crops, even though the yield is a little bit more. We're all hoping that next year input costs come down a little bit, but if input costs stay high and the prices remain at these kind of levels, we could see a very tight margins for corn and soybean farmers here in Illinois once again.
Greg, could you explain to our listeners about the beans yields in central Illinois?
Sure. Once again, we're looking at very good yield prospects. Pod counts have been very high, which shows potential for good soybeans. And we just have needed some rain in August, and some places in Illinois have received some very nice rains. Here in central Illinois, Champaign County, for example, we've had over 5 inches of rain in the month of August. Normal is 3.3. So we are expecting a very good finish to the soybean crop. In Illinois, the old record is 64 bushels an acre. Champaign County's record is 74 bushels to the acre. And I would expect us to set new records for both the state and the county by about 2 bushels. So kind of looking for Illinois yield to be 66 bushels an acre and Champaign County to be 76 bushels an acre, both of which would be a record. Of prices. 2 years ago, we were in the $6 to $7 range for corn, $13 to $15 for soybeans, and that's probably a thing of the past until the next weather issue that we have. I think farmers just need to kind of readjust their marketing outlook to $4 corn and $10 soybeans, and use those targets or those prices as targets. Another thing that farmers can do, especially ones that have bins, storage space, they could lock in the carry. They could sell corn and soybeans out of the bin for March or July delivery, for example. Today, July corn is trading 40 cents higher than fall corn. So if you have a bin, you can put that corn in the bin, sell it for July, store it till then, and deliver it then and pick up an extra 40 cents. Soybeans are 60 cents more for July delivery than fall. So those bins will definitely pay for themselves this year, and farmers probably need to take advantage of their bins situation and use that to their full advantage.
Where people can find you for their risk management consulting services in central Illinois near Champaign County?
The best place is our website, www.totalgrainmarketing.com. That will show a list of all of our elevators in the TGM GrowMark area. And then just click on the Champaign link, and you'll be able to contact the Champaign office.
Thanks, Greg.
You're very welcome, Caesar. Good talking to you.
This is Greg Johnson from TGM Markets, part of FS Grown Mark and Champaign on Back Roads of Illinois. We were talking to Jamie Gieseke from Paradigm Futures and Sioux Falls, South Dakota. How are things in South Dakota and southern Minnesota?
Things are pretty good. Just getting word of some silage choppers starting up in northwest Iowa on some of the lighter ground, sand ground. That, as expected, it's kind of all over the board. That particular area around Okoboji, Hartley area, that was hit pretty hard. That was some of the worst planting conditions. So, late April, early May, really wet soils. And that was probably from our core group of growers, as far as planting goes, it was some of the worst conditions. So they had a tough road right away to start. And now those first planted fields are getting chopped. So we're just starting to get our toes dipped into it, but yeah, all over the board. And we do hear of some big yields, appraised yields, of course, on the silage, anywhere from the 240 to 255. But that's honestly, Caesar, that's pretty normal from what we hear from silage chopping in that area. Of course, then when you start to factor in the zeros, it brings down the average pretty quickly.
Let's start with our conversation about the crop conditions in South Dakota. Could you tell our listeners?
Crop condition in South Dakota is it's pretty ideal, really. I mean, besides the drowned outs that came from the mid-June timeframe, I mean, everything looks visibly, it looks really good. One thing that I think we got to keep in mind is the variability of it yet. From the outside driving around, I mean, it can look pretty pleasing right now, but once you get into it, like we're finding out with some of these silage choppers, it's very variable, and that was kind of as expected. I will say we do need some heat. We're going to need a little bit extended summer here. Sounds like next week we'll get some more heat coming in. Things were a little bit behind average. I know USDA, when they do their crop conditions, they use a 5-year average. Well, one of the things that we were kind of mentioning here this spring is that 5-year average is actually quite low compared to other 5-year averages in previous years, because we've had some late springs as of recently, especially 2019 is one that sticks out. So naturally that'll bring down the 5-year average. So it's not really to say that we were meeting 5-year averages. I mean, meeting average, we were meeting the 5-year average during planting. It's just that 5-year was quite low. So I've been keeping an eye on these growing degree units for South Dakota, Minnesota, Northwest Iowa, and we're going to need some heat. And next week we're going to get some, and hopefully that extends here to the end of the month, because like I say, right now everything looks pretty good. It's just it's behind. Soybeans usually start harvest at the end of September, last week of September, beginning of October. And the old adage is 30 days from the time you see them start to turn is when you start harvest. Very few beans were turning here as of end of last week, beginning of this week. So it's probably a week behind average from what we've seen recently here.
How is in southern Minnesota and I-90 corridor?
Very variable again. That was some of the latest planted soybeans that I saw. So I'm very curious. I mean, 30-inch rows typically will close up, in August. As you drive on I-90, there's a lot of fields that aren't. The 30-inch row beans are not closed. Doesn't mean that the yield won't be there, but it's just one indication of just a smaller plant size there. But yeah, I haven't heard of much, silage chopping as far as, tonnage goes there, but you're going to have some hit and miss. There was some April planted corn that looks pretty good, but there's a lot of holes out there.
Jamie, could you explain to our listeners about the corn carryout numbers for September World Agricultural Supply and Demand Estimate Report?
Yeah, so today we actually got out an ethanol usage.
Do you have any final thoughts?
Well, I mean, tomorrow is going to be a pretty big day with job numbers. Non-farm payrolls typically in August tend to struggle a little bit. And this will kind of be a play in the cattle market as well. I've seen some estimates of non-farm payrolls being sub 100,000. That'd be the first time in I think since 2021. It's gonna be. I'm a little worried about how this cattle market is gonna perform if we see a number sub 100,000. it feels to me like the cattle market is kind of playing more off of a jobs number versus is the Fed going to cut rates? Because you just look at the relation, the stock market has taken off, but cattle really is struggling to bounce here from the yen carry trade. So, I do think there's some risk there if the cattle market wants to focus on jobs more versus just the stock market. That's a risk because it kind of feels like the trade might be shifting more towards, well, if jobs are poor, our consumer is going to shift more towards a more affordable meat product like poultry or pork. Conversely, I mean, we have seen a nice rally in the hogs. We are there's some nice hog crush margins out in the deferreds that I really think producers should take a hard look at, especially in spring of next year. I mean, we're getting in the top third of a 15-year history of the hog crush. So, I think producers have that opportunity to operate under protection or they're out.
Thanks, Jamie.
Thank you, Caesar.
This is Jamie Gieseke from Paradigm Futures on Back Roads of Illinois. Now, we were joining with John Heinberg from Total Farm Marketing for today's podcast. How are you today? John, we are excited about this football season today.
I am doing well, and nothing's quite like the first day of real football. So we'll see how it goes. Got Chiefs Ravens tonight. Can't bet against the Chiefs at home. And obviously, the big game I'm focused on tomorrow is my Packers and Eagles. But we'll have to see how things go. First game of the season don't mean a whole lot because none of these guys have played yet. So remember a few years ago, the Packers absolutely got walloped the first game of the year and then proceeded to win 13 out of the next 14 games. So we'll see how it goes. But good luck to your 4-0 preseason Bears.
Yes, it will be great game tomorrow. Philadelphia Eagles.
It should be fun. Two good teams to kick off the season in a very unique environment from what it sounds like down there in Sao Paulo, Brazil.
I want to go the close of the markets. Could you tell our listeners about it?
It's kind of an interesting close today. First off, let's start grains. Corn market ran into some resistance today. So first time in 5 sessions, we actually finished a touch lower today. Big area I'm watching, I've had kind of pegged as a spot that could be a bit of a wall over top of a rally. This is 410, 411 area on that December contract. We got a potential double top forming if we can't get firmer tomorrow. So we'll have to see how the end of the week goes. That could be a very key day tomorrow for maybe how trade goes next week. A couple things we think we ran into here. First off, if you haven't been paying attention, Mississippi River levels at Memphis have gotten back to restrictive levels for the third consecutive fall. That just slows down movement on the barges, that causes increased freight costs. That gets put into the marketplace. Add in the fact that we've rallied 25 cents or so here off the low in the same time window. U.S. corn's kind of got itself a little bit expensive again versus some of these world competitors. We're still there good value, but we're a little more equal. So with that, realistically, we've been talking about the bean sales. That's been good. We've seen activity almost on a daily basis. We haven't had a corn sale announced now since the 28th of August, which was that 385 low. So it'll be interesting to see what export sales numbers are tomorrow now that we're through the marketing year. But at least the same time frame. We've had a good rally. I think producers need to be at least starting to think about taking advantage of it somewhere, given the supply numbers that are out there. Soybeans fought off the lows of the day, did finish a couple pennies higher, but still didn't take out yesterday's high, which is only about a half cent from here. So it's a consolidation day, we call it, but kind of poised to look like it wants to make a run out. We'll have to see what the export demand is, on the weekly side, and do we get any other additional trades this week? I've heard that China picked up about 26 cargoes of beans. About 12 of them, old crop, new crop, came from Brazil. The rest of it came from the United States this week. So most of those numbers are known. So we'll have to see how this plays out. Lastly, wheat market just got a little tired. Had a heck of a rally there as well, and it kind of looked like it hit the top of its ceiling there for Chicago and KC wheat especially. So it was an interesting close. I really think it sets up for a possible interesting Friday tomorrow, which could in turn dictate the trend for next week.
What are you looking for with the world agricultural supply and demand for next week?
Yeah, that's coming on the 12th or Thursday next week in terms of the next round of crop production numbers. Now, we saw some private analysts come out today. Both of them have raised their yield forecast for both corn and soybeans up from their, August numbers. So we'll see what the USDA comes together with. Now, this will be their first chance. They get boots on the ground and really get out there and measure some samples, and they'll pull more samples than any of these, crop tours or things will. I'm expecting to still see a pretty heavy supply. How heavy, that's the question mark. I think corn stays a little bit variable. Maybe that 183 number they got is pretty good. We saw those private analysts in the mid to upper 182 yields today, or yesterday. Those numbers came out. Beans again, 53, 54 could be in the cards. Again, some of those private analysts were in that same window. So we'll see what the trends are there. I still think it's going to be a very heavy supply overall. We may have a few demand adjustments that could come in and help out that core market, given some of the late season export demand. But it's going to be another place setter, and we'll see where the market wants to go from there. Of the two markets, maybe the one I'm more worried about in the near term here could be just the supply in that soybean market until we really get some final numbers when the combines roll. That heat and those drier conditions that we are experiencing in end of August won't probably be calculated in this report.
John, how is the weather?
Livestock revenue, again, not 100% familiar with it other than just from talking with producers about it. But, corn prices are down, cattle prices are slipping, but where's the margin at? What are we protecting? When you use any type of tool such as that, or using hedging strategies through someone like myself, just make sure you weigh it all out and understand where your coverage is.
How is the feeder cattle for this afternoon?
Feeder cattle prices, like I said a bit ago, just tough day today. We're down $2 to $3 pretty much across the board, actually 3.5 on the November feeders. Again, reflective of that $2 drop in some of those cattle prices today. Feeder charts are looking soft. Really watching like this 237 area October. We're kind of falling through that here today. It does kind of open us up for this market to move another leg down. So right now, I'm just not a big fan of the cattle market in general, more because of just the economy, the consumer, the news, the trend, the money flow. All those things are just seem to be a little bit more on the negative side here. That for cattle producers going forward, I'm more on the defensive than I am on the offensive, and at least in the near term, as we start working through some of these fall and early winter cattle.
Do you have any final thoughts?
Well, obviously it's going to still be a volatile time. So make sure producers are taking advantage of opportunities, making sure you're having conversations with your elevator. Watch that basis. We're going to have a lot of grain moving around here in the next handful of weeks. That could weigh on the cash market side. Be a little bit aggressive if you got some numbers that work for you, especially after this rally. I know they're not great. Everybody wants to have home runs, but a base hit or two here and there could be the difference in the bottom line. So definitely make sure you're staying active in the marketplace, taking advantage of when there's some value there. Look at strategies if you want to stay in the market longer, other than the physical risk of the bushels.
Where people can find you. further
Sure.
risk management consulting services?
Sure, feel free to give me a call 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com and our website, totalfarmmarketing.com.
Thanks, John.
Thank you very much. And as always, go Packers.
This is John Heinberg from Total Farm Marketing for today's program.
Ding.
Thanks to all of the guests on today's program. We're running out of time on Back Roads of Illinois. This has been Back Roads of Illinois. I am Cesar Delgado. Have a great day.